Bitcoin has only just begun its pre-halving rally, and that tends to occur 60 days before the halving event. We've seen this across time. But instead of talking about the pre-halving rally today, we're going to be talking about the final bargain buying opportunity that is the last pre-halving retrace around the halving event itself. We're going to be talking about where could Bitcoin's price action bottom after we see a local top for Bitcoin's pre-halving rally in the future. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. So we know that Bitcoin has broken out into a pre-halving rally. It has done so after reaccumulating at highs for a few weeks, and this current cycle in general has been a story of reaccumulation ranges across time. We've seen multiple reaccumulation ranges in this cycle already, so breaking out right now is quite interesting. It has done so even a slightly ahead of schedule, because we tend to see pre-halving rallies break out 60 days, roughly speaking, before the halving event itself. And last week we actually saw a breakout. So that's a few days ahead of schedule. Nonetheless, we're seeing this historical pattern replicate and repeat. So we're going to be talking about looking ahead into the future, because this pre-halving rally isn't going to last forever, even though most people will think that will be the case. We're probably going to get a pre-halving retrace a few weeks before the halving event itself. We've seen pre-halving retraces across time. So if we focus on 2020, for instance, we saw the local top occur approximately 2 weeks or so before the halving event itself. And if we focus on 2016, we saw this pre-halving retrace occur 4 to 5 weeks before the halving event. So it tends to happen across time, and it'll probably occur in this cycle as well, approximately 4 to 5 weeks before the halving. So now that we've covered when exactly that pre-halving retrace could occur, how deep could that retrace be? Well, let's look at 2016 first of all. We've seen a retrace of 40%. And what's interesting about this retrace is that it occurred, of course, 4 to 5 weeks before the halving event, but we saw tremendous downside volatility of up to 40%, and this downside wick actually touched the very top of the previous reaccumulation range that enabled this entire pre-halving rally. So that's an interesting technical event right there. But you can argue, and I've argued this in previous videos, that this downside wick is very volatile. So it could be a 2016 thing. We might not see that sort of volatility in the future. So let's talk about a less volatile retrace in 2016, which is 29%. And 29% saw price essentially drop and form this post-halving reaccumulation range, which saw price consolidate for a few weeks before breaking out from it and also retesting it as a support. So these retests of old reaccumulation ranges, this being one reaccumulation range, we retest the top of that before rallying higher. Here as well, this reaccumulation range, we retested the top of that reaccumulation range with this downside wick. Interesting technical events that enable trend continuation. Nonetheless, a 29% retrace within this range occurred, and that's the more conservative estimate for that pullback. In 2020, we saw a much shallower retrace, probably because we saw a tremendous crash a few months prior because of the pandemic, but 20% around the halving event is what happened in 2020. So let's talk about this pullback. Let's say, and we don't know where the local top is going to be for this current pre-halving rally, but let's say the pre-halving top is coming quite soon. Let's just assume that, because this is going to give us insight into what sort of levels we could potentially expect should that pre-halving rally top occur in the near future. We don't know where that top is, but let's just assume it's at current levels. 19% retrace, so essentially mimicking a COVID or rather 2020 retrace around the halving event. A 90% retrace would get us into 42k, and that's approximately the top of that reaccumulation range that we just broke out from a few weeks ago. Interesting, because we tend to see, like we saw in 2016, we tend to see retests of old reaccumulation ranges, not only here, but also in the post-halving period as well. So that's quite interesting to think about. But that would be a more shallower 19% pre-halving retrace like we saw in 2020. But what if we see a little bit of a deeper retrace, 29%? And remember, 29% is that more conservative drop in 2016. 29% would get us to 37k. And from this weekly time frame, we can't really understand the magnitude, the significance of this 37k region. So let's zoom out to the monthly perspective. If we take into account this monthly level at 35k and this monthly level at approximately 38k, a drop of 29% from current levels into that pre-halving retrace would get us somewhere into this zone at 37k. So it does make sense, because if you see these previous downside wicks right over here, or even here, and upside wicks into this level in 2021, you can see that this is a quite volatile level, a monthly order block in any case, a monthly demand area right over here. So this was a supply area here, but a demand and support area right over here and here as well. So right now, if a retest were to occur of this monthly order block, we'd have to see a 29% retrace from current price levels for a Bitcoin pullback around the pre-halving retrace. But what if we see a 40% retracement? And we've seen a 40% retracement in the past. We know that in 2016, this was quite a dramatic retrace around the halving event. It's quite unlikely that we get that sort of retrace in this cycle. It simply is a massive crash, because, of course, in this cycle, we've only seen 20 to 25% retracements across time, most recently minus 18% in this reaccumulation range. So why should we see a 40% correction in this pre-halving retrace? Nonetheless, let's talk about it. Let's consider it. A 40% retrace would get us into the top of this old reaccumulation range from a few months back for a retest, which is quite interesting because, as we've been talking throughout this episode, Bitcoin tends to retest the top of its reaccumulation ranges. So either it's a 40% drop, which is quite unlikely, but really interesting to see that we go into 31k, we go into the retest region of the top of the reaccumulation range. But also, if it's a 19% retrace, then we get into the top of this reaccumulation range for a retest. Now, this video really does depend on where that local top is going to be in this pre-halving rally. We don't quite know that, and quite frankly, I don't really want to know where that local top is going to be, because I know that once we do see a pre-halving retrace, I'll be able to understand, could we see a 20% retrace? Could we see 29%? Any sort of pullback around the halving is going to signify one of the actual final retrace in the pre-halving period before we finally develop that post-halving reaccumulation range. That is going to be the final pre-halving retrace. And whatever the pullback, whether it's just 10%, 20%, 25%, 29%, it's going to signify the last bargain buying opportunity in the pre-halving period, and one of the last best discounted prices we'll be able to get in the pre-halving period before we finally rally into the post-halving parabolic upside period that comes several months after the halving. So whereas the local top, we don't quite know, but we understand and know how to think about these pullbacks on the pre-halving retrace. If we go a little bit higher, then we have to try and understand what a 20% retrace could look from there. What could a 29% retrace look from there? It's all about trying to understand how deep this pre-halving retrace could go. If you think it's going to be a shallow one, that's fine. If you think it's going to be a little bit deeper, then that's fine too. It's all about being prepared, because history suggests a pre-halving retrace is going to occur a few weeks before the halving event, and at the very least, it would be wise to be prepared for it. Thank you so much for watching today's video. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital. Thank you so much for watching, and I'll speak to you in the next one. Speak to you soon.